Welcome. In this video, will ZBCN coin continue to rise? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand.
When we look at the chart analysis, a striking pattern stands out. The price has been respecting a specific descending trend line for quite some time. This trend line has acted as a resistance level where the price has faced selling pressure at every peak since the past. On each attempt to rise, the price has typically touched this line and been rejected, continuing its downward movement. This indicates that investors tend to open short positions when the price reaches this level and that the overall market sentiment aligns with this behavior. However, no trend lasts forever, especially in descending trends. The pressure tends to weaken over time, leading to the possibility of a breakout. The current structure may be on the verge of such a breakout. A breakout from a descending trend line is generally considered a significant reversal signal in technical analysis. It's not just a linear breakout, but also a sign of a shift in market psychology. A price structure shaped by selling pressure begins to show that buyers are gaining strength and sellers are starting to weaken. So when the trend line is broken, it's not just a line being crossed on the chart, it's also a shift in investor mindset. Most traders begin to believe that the former resistance will turn into support, potentially triggering new waves of buying that push the price higher. Currently, the price is moving toward this descending trend line, almost as if it's preparing to test it. In technical analysis, this is often called the pre-breakout setup phase, because as the price approaches such significant trend lines, increases in volume, indecision candles, or small pullbacks are typically seen. All these developments show how closely investors are watching that zone. If the breakout occurs with strong volume, it's often more sustainable. Breakouts without volume can sometimes turn out to be fake breakouts. However, based on the current chart structure, we see that the price is approaching this area with strong momentum, and buyers appear eager. Following breakouts of this kind of descending trend line, a retest usually occurs. In this scenario, the price breaks the line and then pulls back slightly to test it again. If this test is successful, meaning the price holds above the broken trend line, this level then becomes a strong support. As a result, the price may bounce from here and continue its upward movement. This is one of the core principles of technical analysis. Broken resistance becomes support. At this exact point, patient and strategic investors can find great opportunities. These structures are typically among the clearest signs of trend reversals and can offer substantial profit potential in the following trend. Another important aspect that emerges if the price breaks this descending trend line is the shift in overall market sentiment. Because a trendline breakout is not just a technical signal, but also a sign that something fundamental might be changing. It could be due to news, a change in investor expectations, or large players seeing buying opportunities at current levels. In any case, the breakout would indicate a shift in the market structure. Another factor to be mindful of in such breakouts is the group of traders known as breakout traders. These individuals look to enter positions exactly when key trend lines are broken, hoping to benefit from the continuation of the trend. If the breakout is supported by strong volume, the involvement of these traders can cause the upward move to accelerate, potentially pushing the price much higher than expected in a short period of time. Moreover, when a descending trend is broken, it's important for investors to redefine their stop-loss levels. This is because the direction of the market has changed and old support resistance structures have given way to new ones. At this point, the broken trend line can be used as the new support level, and as long as the price stays above this level, the uptrend is expected to continue. This also gives investors confidence and allows them to hold longer-term positions. In conclusion, the current chart structure shows that the price is approaching a highly critical level. Breaking the long-standing descending trend line would be significant not only in terms of technical analysis, but also in terms of overall market sentiment and investor psychology. If the price breaks this trend line with strong volume and then successfully retests it, holding above it, this could mark the beginning of a new uptrend. This rally could be strong enough to recover previous losses and may offer high return potential for investors. But we can't base our analysis solely on trend lines. Let's take a look at other metrics as well. Stay tuned. I'm interrupting the video for a moment, friends, because BitTunex Exchange has a great campaign. Here's how it works. After registering on the exchange via the link in the description and completing KYC, if you deposit $100 for your first deposit, you will receive a $20 bonus. If you deposit $500, you'll receive a $100 bonus. And if you deposit $1,000, you will receive a $200 bonus. I think this is an excellent opportunity for leverage trading. For more details, you can read the articles below. The link is in the description. A bullish order block is a significant
significant structure in technical analysis that indicates a strong upward reaction from a specific price zone, suggesting the presence of large buyers below that level. Especially if these blocks have played an influential role in past price movements, investor interest in these zones can be quite high. Looking at the current price structure, there is a notable bullish order block positioned just below the current price. Based on past price movements, this block has acted as a strong buying zone, providing data that price previously moved upward from this level. If the price pulls back from its current position, a move toward this bullish order block can be expected. Market makers and large players often push the price towards such liquidity zones to open positions at lower levels. This suggests that following short-term selling, the bullish order block could provide support, potentially triggering another upward move. When the price reaches this zone, a significant increase in volume may occur as large investors place buy orders. This increase in volume can be seen as a supportive factor for the bullish move. The bullish order block is also a psychological support zone. Market participants remember this area as one where the price previously reversed, and they may instinctively lean toward buying when it is reached again. This behavior can trigger another upward move. Additionally, such blocks are not just areas where price finds support, but also zones where direction may change. The intense buying in these areas can lead to short-term trend shifts in the market. Therefore, the area where the bullish order block is located could play a critical role not only in the past, but also in the future. The price's reaction when it approaches the bullish order block is crucial for determining direction. If the price begins to bounce upward with strong candles upon reaching this zone, it may indicate that large buy orders are being executed. If technical indicators also provide supporting signals at this point, these can give investors confidence and support the price's upward movement. However, investors should also be cautious of the possibility of a temporary dip below the bullish order block. Such a stop hunt move in this zone could cause smaller investors to panic and close positions at a loss. These dips are often short-term and may be followed by a return to the order block area and a renewed upward move. Therefore, it is healthier to evaluate this zone not only on the surface, but also based on volume and formations. The price's movements prior to reaching the bullish order block are also valuable for analysis. If there's a slowdown in price, an increase in wicks, or smaller candle bodies during this period, it may signal that the price intends to move toward the lower liquidity zone, that is, the bullish order block. This could be interpreted as a strategic move by market makers. In this context, for the price to make a strong upward move, it may first need to test this critical lower area. The function of a bullish order block is not limited to technical analysis. It also reflects investor psychology. Many investors make decisions based on past price movements. Therefore, when the price reaches this zone, they may act on the thought, it worked before, it might work again. These behavioral patterns can contribute to the price reversing at this level. So when technical analysis is combined with psychology, the importance of this area becomes even more apparent. The current market structure may also be increasing the significance of the bullish order block. Especially if the current trend is upward and overall momentum continues positively, the likelihood of a strong price reaction from this area increases. Order block reactions that align with the trend are usually much stronger. Since there is already a buying tendency in the market, these zones can serve as additional triggers. It is also important for investors to consider these zones not just as support areas, but as potential starting points for new trends. A bullish order block is not merely a temporary bounce area. If supported by strong volume, it can be powerful enough to initiate a new rally. Therefore, increases in volume at these levels may indicate that large investors are entering the market. Taken together, it becomes clear that the bullish order block position just below the current price is highly significant in terms of technical analysis. How the price reacts when approaching this area will be decisive for not only short-term but also medium and long-term movements. If the price reaches this area and reacts strongly, it may signal a reversal in the potential start of a new upward trend. This could present highly profitable opportunities for investors. In conclusion, the bullish order block located just below the current price has the potential to be a key area watched closely by major players in the market. The price's reaction upon testing this area is critically important in determining the next trend direction. Investors should monitor this zone carefully and make strategic decisions by considering not only technical analysis, but also market psychology. If strong buying with volume occurs in this area, the upward potential may be quite high. For this reason, the bullish order block is one of the key levels that must be monitored closely.
The MACD, or Moving Average Convergence Divergence Indicator, is one of the most powerful tools used in technical analysis to identify market momentum and trend reversal signals. In particular, crossovers between the MACD line and the signal line can provide clear indications to investors that a directional move has begun. In the current scenario, the MACD line is about to cross above or has just crossed above the signal line. This technical structure is generally interpreted as a bullish signal, indicating a strong potential for upward price movement. A bullish crossover of the MACD, meaning the MACD line gains upward momentum from below and crosses above the signal line, strengthens investors' tendency to take long positions. This indicates that buyers are re-entering the market and selling pressure is beginning to lose its influence. Especially if the price is positioned near key support zones or upward trend lines at the time of the crossover, the technical reliability of this setup increases. This is because the positive signal from the indicator also reflects that the price is holding at support and upward momentum is building. Historically, such MACD crossovers have often served as the starting point of strong bullish moves. Attention should also be paid to the MACD histogram. If the histogram bars start to exit negative territory and approach the zero line, it indicates that upward momentum is increasing. Given the current technical setup, the fact that the MACD line is trending upward while the histogram is moving toward positive territory further reinforces the strength of this crossover. This structure may signal not only short-term but also medium-term bullish trends. When analyzed in higher time frames, such a bullish crossover of the signal line by the MACD line is often considered the beginning of a strong upward trend. It should be noted that one of MACD's greatest strengths is its ability to simultaneously show both trend direction and momentum strength. In the current situation, with the MACD line curling upward and in close contact with the signal line, this crossover may be a strong leading indicator for an upward price move. At this point, the most important factor for investors to consider is whether the price level at which the crossover occurs is technically significant. If this crossover happens near a support zone or a psychological price level, the accuracy of the MACD signal increases. While there is never certainty in technical analysis, statistically, these types of bullish MACD crossovers have worked as strong bullish signals in past price movements. Especially during trend initiations or recovery phases following corrections, MACD signals can offer serious advantages to investors. A similar scenario appears to be present now. The MACD line has started to curve upward and is either about to cross or has just crossed the signal line, technically suggesting that the price may be preparing for a new upward move. If this crossover occurs as the price tests a key resistance area, or if an increase in volume is observed, the strength of this technical signal is further reinforced. Momentum-based indicators like MACD should not be evaluated solely based on line crossovers, but also supported by volume and price action during the crossover. If the price experiences a clear upward breakout at the time of the crossover, this could present a valuable opportunity for investors. Additionally, it should be remembered that the MACD can sometimes provide delayed signals. Therefore, investors should not rely solely on the MACD, but should analyze it alongside other technical structures and consider the crossover as a confirmation signal. However, in the current scenario, with the MACD line crossing the signal line from below, the price structure being positive, and overall technical formations also supporting a bullish outlook, it suggests that this MACD signal could be quite reliable. In conclusion, a bullish crossover of the MACD line above the signal line is considered a highly positive development in technical analysis. These types of crossovers often serve as indicators of strong price moves. Especially if this crossover occurs at support levels or following higher lows, the likelihood of increased bullish momentum is even greater. In the current analysis, the signal from the MACD offers strong promise for an upward price move. At this point, investors should carefully monitor both price action and other indicators and trend structures used alongside the MACD to make more informed decisions. If the MACD's upward crossover is supported by volume and aligns with price structure, it may be only a matter of time before the price enters a new bullish trend. For this reason, from a technical perspective, this MACD crossover should be taken seriously and closely monitored. The MACD lines need to continue rising. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.